This is the show where we take you through all the global cues and what transpired in the global markets and what are the cues you need to keep on your radar before the start of D Street. But first up, let's see how the Wall Street fared. Kanishka, we see some bit of profit booking that's now coming in on the US markets after the summer rally that we saw. Yeah. We do see profit taking coming in across both and usually also seasonally. September is a weak month for the US markets.
Absolutely. Like you said, US has started the month of September on a weak note yet again. The Dow Jones, for instance, that fell about 250 points or about 0.5% in overnight trading, whereas S&P 500 that lost about 0.7%. On the other hand, we have Nasdaq, the tech-heavy Nasdaq composite that dropped about 0.8%. These were dragged down by tech heavyweights like Nvidia, which slipped about 2% in yesterday's trading session. Bond yields, on the other hand, spiked with the 10-year yield at 4.27% and the 30-year yield topping 4.9% as investors digested a court ruling that many of Trump's global tariffs were illegal, a move that could mean billions in refunds. Now remember, September has historically been the toughest month for equities, and strategists warn of continued volatility in the US markets. In fact, in our after-hours trading, Alphabet shares jumped over 7% after a favorable ruling on its Chrome browser and search practices. Now, the big test ahead, of course, is Friday's August jobs report, which could shape the Fed's next rate decision. So that's the reason why we're keeping all eyes on Fed on the jobs report that's due to come out on Friday. So that's how the US market shaped up, a negative start to the month of September. But how are things on the crude front?
Right, so negative start as far as Wall Street is concerned, but as far as crude prices are concerned, they gained ground on Tuesday as Ukraine war escalations raised questions over the resilience of Russian supplies, while uncertainty lingers over the impact of Washington's policies on key oil consumers. Now, Brent futures in November expiry closed at $69.14 per barrel, up 99 cents or 1.45% from the Monday close. The front month October NYMEX WTI contract settled in at $65.59 a barrel, higher by 2.47% or $1.58. And WTI futures did not settle on Monday because of the US labor market volatility. So that's where the crude is. The crude has seen inching up a little bit, and that's where the crude is sitting at. Gold is also holding above the $3,530 an ounce. Now remember, gold is hovering around the record highs that we saw coming in. Even as far as silver is concerned, silver is also seeing a lot of bullish momentum, if you will, and we also see a spike up in the bond yields, and also that could be a reason perhaps why the US market saw the cuts that we saw coming in.
Absolutely. In fact, the gold has stayed above that $3,600 mark, remaining at that all-time high.